The main focus, actually, of what you have been reading and writing about is the fact that there will be more investments to go on energy. If you look at CapEx, it fell 35% over the past decade. You expect this to now significantly improve. Where does it go to? The oil, the fossil fuels, or the renewables?
Thank you, Francine. I think it will go everywhere. The extent of underinvestment in the energy industry is almost shocking over the last 7 years. And it had to be reversed, but you needed a political event to really change the perception of the market, of politics, and also of sustainability investors to the need for more energy to more people. I think oil and gas will probably end up being the biggest delta in terms of investment, but low carbon investments will continue to rise. And I think this is a defining moment for hydrogen, where it really starts its long path to becoming what we believe should be 15% of the energy industry in a net zero world.
Michele, arguably before we get to that hydrogen shift, we have the LNG deal between the US and Europe. How sustainable is this, the 15 billion cubic meters, and how do you overlap that onto your broader views about the energy transition we're seeing in Europe?
So we've always argued that LNG and natural gas are key green transition fuels, at least for a decade in Europe, potentially for up to 3 decades in emerging markets. And I think it's about time that we realize that we cannot achieve a sustainable energy transition without more affordable and lower carbon energy. And I think this is what we are going to see coming more out of the US into Europe, but also from a variety of other regions, including Qatar, including Africa, including Southeast Asia.
But Michele, the EU is pretty aggressive in terms of targets to try and wean itself off Russian oil and gas. I mean, this seems almost impossible to achieve. So if you can just talk us specifically about how much will we still be reliant on Russia in 12 months and then 24 months?
So on our numbers, excluding demand rationing, so excluding shutting down the more gas-intensive industries, we think we could probably substitute 2/3 of Russian imports over the next 12 months and 100% of the imports within 5 to 10 years. The reason why we need 5 to 10 years to completely get rid of the imports is because it takes time to build new LNG projects. By doing long-term gas supply, we can allow these projects to move ahead, but it will not be until 2026, 2027 when this new supply will really materialize in large scale. And that's why we think the independence from Russian gas is effectively a decade-long ambition, but a substantial reduction of that reliance, a better diversification of sources could be achieved already within 12 months, especially if we manage better the summer inventories.
Michele, when it comes to LNG and the need for that infrastructure build-out, particularly in countries like Germany, where is the private sector and the investment there, given that we heard from the likes of Joe Biden, longer term, he wants to see this phased out completely? How do you square that circle?
I think the political environment needs to provide support for more investment in natural gas. And for that to happen, I think we need a better regulatory framework, including a better EU green taxonomy that fully supports LNG and natural gas as a green transition fuel for this decade, and therefore allows the more sustainability conscious investment to be able to finance this infrastructure build-up. There is build-up in Europe that needs to happen, especially around regasification, but that's relatively straightforward. The bigger build-up needs to happen at the liquefaction point, where each plant can cost $6 to $7 billion, and we probably need 20 to 30 new plants over the next 5 years to go ahead in order to supply Europe's incremental demand to substitute Russian gas.
So, Michele, what happens in the short term, and actually is the most dangerous point as we go through this transition winter of this year, because we won't have enough stockpiles and it could get very cold again?
I think in the short term, what we do need is for Europe to continue to attract gas from the rest of the world. And in order to do that, we need to continue to pay attractive prices for LNG imports. Now, it's not necessary that all of European consumers pay for those high prices. There could be a cap that the EU is discussing on pipeline gas and on some of the gas that is sold in Europe. But to attract LNG, I think we will need to continue to outbid Asia on that LNG to continue to come to Europe and make sure that there is no gas shortage, especially if there is a late cold spell in this winter.
Michele, you and the team at Goldman have mapped out what you think is the importance of green hydrogen. You've made that very clear. Are you seeing commitments at the EU level within Brussels to support that vision and get us to where we need to be for and within the green hydrogen space?
Yes, I think the EU fully realizes the importance of hydrogen as a long-term solution to the seasonality problem. Because if we go back to the energy crisis we're experiencing, it's a seasonal energy crisis. It's a winter energy crisis. And you can't resolve it with solar and wind, which have, in many cases, opposite seasonality. You need long-term storage. Hydrogen is the perfect solution for it. It can be manufactured in Europe, or it can be safely imported from the Middle East and North Africa. And in the Repower EU plan, we've seen a quadrupling of the target to 2030, which I think really signals the beginning of a major investment phase in green hydrogen and of a build-up of a hydrogen economy in Europe.